In this video, I'm going to be talking to a co-founder of another Cosmos project. This one's a little bit under the radar, but it's growing and growing, and it is an OG of the Cosmos ecosystem.
The world's most advanced cold wallet for the new generation of cryptocurrency lovers. Descent.
Take the first step towards online privacy. Get NordVPN.
Hey, Henrik, thank you so much for making yourself available.
Hey, no worries. Thanks for having me on.
You are so welcome. And you are the co-founder of e-money.com.
Yes, exactly.
Yes.
You should just call it e-money. But
e-money, I know, but so people can know what the link is. It's e-money.com, and I'll have all the links in the description below. And yours is a little bit of a different project from the little that I know about it, and we'll get into it. It's got a stable coin, and it's a bit of old legacy structures because you intersect and everything, right? And you've been going for a while. Give us the beginning. Where did it all start and why?
Yeah, it started back in 2017 when my co-founder Martin had spotted the Cosmos fundraiser and got interested in using the technology for something meaningful to build a business around. So his idea was to bridge the traditional world of finance with a newfangled world of blockchain. So essentially, it's about creating a stable coin, right? So in 2018 we went full time on the project and have been working ever since on establishing connections and banks, agreements with auditors, talking to authorities about how to do this in a compliant and transparent and trustworthy way. So that's been what we've been working on. So we launched our mainnet in March of 2020, but what we consider sort of the real launch in a way was when we were able to enable IBC and connect to other zones in the Cosmos ecosystem. Notably, Osmosis has been very, very good to connect to. It's been an incredible launch, in my opinion, and has driven a lot of the issuance we see now. At this stage, we have issued for around 18 million euro worth of stablecoins, and we have provided, I think, 3 or 4 proof of funds to prove that they're actually present in a bank account somewhere. So it's that's the very quick version of what we've been up to since launching a long time ago.
Right. Yes, it is a long time ago in the crypto space, right?
Yeah.
It's like the 4-year halving cycle is a lifetime. It's 70 years in human years.
it's true. I mean, it's true. There's so much that happens in just a short span in crypto that it's sometimes tough to keep up. But yeah.
Okay. Well, talk us through your project. What is it? I mean, you say you're a stable coin. Do you have a sister token along with it? And how does it work and why?
Yeah, so we're a stablecoin, and our goal is to provide a reliable and trustworthy stablecoin that is asset backed by money in a bank account. So that, of course, places a high demand on us having banking connections and auditing and all this stuff. So the current economic environment in Europe is rather unusual because we have a negative interest rate. So our stablecoins have the rather unique selling point that they're interest bearing. So which means that the interest can be passed on to the end user. So in the longer term, when we once reestablish economic normalcy, this will mean that the stablecoins will seem more like a bank account. They will have a positive interest rate attached to them. But right now, it's a very small negative interest rate.
Right. So let me just. So does that mean that if I have e-money, and I can stake it in my Kepler wallet and I'll receive positive interest?
No, you can. There's no way to stake the stablecoins. We have a staking token called the NGM, which is used as our staking token. And what the interest-bearing model has allowed us to do is to act like one of the more traditional banks, where we have an interest markup, which we are using to daily buy back and burn NGM for the stablecoin. So on our chain, you will see once a day that there's also Dex on our chain, a small limit order book, and it will buy back NGM and burn it for about 0.5% per year of the stablecoin issuance. So essentially, the larger our issuance grows, the better this buyback, the stronger this buyback mechanism will become. It's I think it's a pretty strong value feedback loop, so to say, to bring the success of the project, the size of the issuance directly into contact with the value of the staking token.
Okay. So you have e-money, which is one e-money is equal to €1.
Yeah, I mean we have 5 different currencies right now. So we have e-money euro, we have e-money Swiss francs, and then the Nordic currencies, Danish, Swedish, and Norwegian kroner. It's by far the euro that is gaining the most attention, for which makes sense. It's one of the biggest currencies. So that's the one we're focusing on right now. So we call it the e-money euro, our stablecoin that is backed by euro.
Okay, and then the NGM, that's the staking token that gets burnt slowly every day, a little bit every day, a little bit every day.
So it can be staked. For there's an inflation on it. I believe it's 10% per year. But as an opposite force, there is the buyback mechanism that buys back and burns in gems at some value that is established. So the larger the issuance grows, the more effective this buyback and burn mechanism will become.
Okay, all right, very good. And then there is a particular issue with having a euro stablecoin, which is actually, there's a particular issue, I think, having any stablecoin given the amount of money printing that's going on, right?
But, I mean, there's so many challenges in this space that.
Yes, but you have a negative interest rate or a zero interest rate environment. Mm-hmm. How does that affect the stablecoin? And isn't that crazy upside down world money?
I mean, what we've done is we have replaced a traditional stablecoin is pegged 1-to-1 with the underlying currency, possibly. I mean, so you could argue some of them might not be, but that's what they trade for.
Yeah.
We have replaced that 1-to-1 peg with what we call a dynamic peg, which is very slow moving. So we constantly publish, our exchange rate oracle publishes the exchange rate between one euro token and €1. So that allows us to implement an interest rate mechanism on the tokens. So what this means is that this exchange rate is used going into euro tokens and out of euro tokens. So there's no margin on that exchange. It's only being used to say what is the value of this in euro. And a very important detail is that this is obviously a very slow moving peg. So if it's 0.99 today, then in 1 year it will probably be 0.98 or 7 or something. So you could say it's not something where you suddenly wake up one morning and it has a halved in value. It's right. Dynamic peg, which is something we should we need to learn how to communicate about. It's a little bit funny sometimes in crypto. People can accept the craziest models of stuff building on top of itself and all this stuff. But if you say to someone, this stablecoin is not 1-to-1, then they freak out. It's like the 10 commandments being broken, apparently. So that's interesting.
Yes. Now you said earlier it's backed by euros, and then I imagine the e-money Scandinavian ones are backed by those currencies. And how do I know for sure? Because there are other stable coins that apparently are also backed.
We publish periodic proof of funds. We've been lucky enough to enter into an agreement with Ernst & Young, who go through the accounts and the company books and ensures that the money is either in a bank account somewhere or in government bonds. So for safekeeping.
Okay, and then how do you get the money to buy those bonds and to buy those euros?
Well, we do OTC deals for large enough orders, but other than that, we are market making on particularly Osmosis. So if you buy euro there, you probably get the market price for Atom or Osmo or any of the other currencies that are pairs in.
Okay, and how is your project funded? How did it get going? Where did the funding come from?
Well, we started our self-funding for 2 years, I believe the first 2 years, and then we had a fundraiser around 2020 where we got some. We had a private sale for the gem token, and that's basically how we make a living. We had a token sale, and now we have the NGM token listed on 3 or 4 exchanges, and that's providing enough to make this sustainable so far.
Okay, all right. And then, what is the point of all this? What's wrong with the other stable coins that you wanted to go and create this one?
Well, I mean, we found it interesting to create a European alternative to the US dollar stablecoins. I mean, what we would like to see ourselves as is the European USDC, essentially, which we find is they seem to be putting a lot of effort into being compliant and also having the money, backing the tokens. All this stuff is important to us. So there are many ways to create stablecoins, as we see them. There's algorithmic, there's asset backed, and there's some that maybe don't provide the proof of funds they should, and all kinds of stuff. So we figured we would create a trustworthy alternative. That I mean, in the long run, we also see a future where blockchain is not just for degens and get rich quick people. So where maybe companies want to settle, where it can be used for remittance, where I mean anything you use the traditional bank account system for today, and we want to sort of prepare the way for that to happen, like for people to have a trustworthy option once we enter that era. Like I'm hoping one day we'll be in the supermarket paying with blockchain technology and not really thinking about it. It's just an app that happens to reconcile on a blockchain somewhere.
Right. Okay. All right. So I can see how a stablecoin is useful for traders. Large traders. Bitcoin or Atom reaches an all-time high, so you want to duck out and get into a stablecoin, and you can do it with e-money into a European currency. And in particular the euro, because that has a lot more liquidity than the others.
Yeah.
So I can see the value of that. But you talked about commercial organizations, like large financial institutions using e-money.
I mean, I could see a future where that happened. We have been in talks with some large financial institution. It hasn't panned out to anything concrete yet. But I mean, I suspect with the way things are going, banks are taking a bigger interest in the whole crypto space. I mean, things are slowly moving in the right direction, and if people could stop scamming for 5 minutes, it might actually sort of enter the mainstream at some point. So
I've got some bad news for you. Well, yeah. Because sometimes I hear, you may have heard this as well, right? This conversation in the crypto space that we're building an alternative world and we're going to be better and different and stuff, and then there's a scam, and then people are like, oh my god, no, we're supposed to be better and different. And I work as a child protection social worker, as I told you, right? No, human beings are just going to human wherever they are. They're just going to do all the things that human beings do, and the cryptocurrency space has no virtue has no monopoly on virtue than any other arena of human existence. I'm sorry to say.
I could probably get behind that analysis, unfortunately. Yeah, but I mean, I'm still hoping that there'll not be a scam that's big enough to break the eventual move into the mainstream, where for example, large corporations can use trustworthy stablecoins as a way to pay. Like that's what we hope for. But obviously, a lot of stuff can happen and do happen all the time in this space. So I'm not holding my breath.
Yep. Okay. Now, how is the stablecoin affected by fluctuations in the value of the euro? Because I know the euro has been sliding quite a bit for the last few weeks.
I mean, the stablecoins are backed by euro, so you could say like whatever fluctuation in value against other currencies is what happens, right? I mean, then the euro is worth less or more than against the dollar. That's just a traditional exchange rate.
Okay, all right.
So I mean, yeah, we make quite. It's very important for us to back the stable coins by the actual currency that is labeled by. So, for example, I mean, we're not using the reserve to buy, I don't know, Tesla stock or speculating in them, which might make them more interesting in the short term. But this also carries a risk, obviously, of suddenly having a too small reserve.
Yes, and just on that, I did hear of a much larger stablecoin that had actually bought bonds or invested in Evergrande in some way, and could have been negatively impacted by that. Now, I don't know if it's actually accurate or not, or if it's just a rumor or whatever. But given how this much larger stablecoin, given its reputation, it wouldn't surprise me.
I think I saw those rumors as well. Yeah, I mean, we have this theory that it has some value to be able to prove that you're fully backed to stablecoins. But I mean, it's true. Like we sometimes see news that maybe it doesn't matter as much as you would have hoped.
Yes. Okay. Now tell us about NGM. Is there anything else about it that you want to let us know, that you want to cover?
It's our staking token. So as I'm tried to explain earlier is we have this functionality where it gets bought back and burned by our interest rate mechanism. So I find that pretty interesting. It's an interesting feedback value loop. I think it's one of the more convincing ones I've seen in crypto, if I have to say so myself.
Yes.
It's purchasable on Osmosis and KuCoin and Ascendex, so that would be good places to get it.
Right. Okay. And then so you get capital growth and you get staking rewards.
Yeah.
And because people can purchase on Osmosis and KuCoin, because this is one of the questions I have, there's no requirement to do KYC, even though you're all, fully regulatory compliant.
No, not on those. I mean, if you buy on KuCoin is handling the KYC, and Osmosis is a Dex, so far they don't have that kind of requirements. So it's I mean, you could say the regulatory landscape around these things doesn't always make sense, but that's the world we live in. And on a Dex, there's no way you have crypto to crypto. It's not so far.
Right.
There's no KYC.
Okay. And then what have you got in the roadmap? What's coming ahead?
Yeah, we're looking into having credit card integration, so people could buy NGM and Euro stablecoins directly from our website using credit card. That's pretty big on the wish list and has been on the roadmap for a while. But it's obviously it's expensive and troublesome to create, but it also looks like it's panning out. So that will be very interesting. We hope to.
Sorry, Henrik. Excuse me. So that means like being able to buy e-money or NGM from the website using a credit card or a debit card. You're not talking about creating your own credit card or debit card.
No, exactly like you laid it out. It's about buying the tokens. No, we don't have plans to issue any credit cards at the moment. I mean, you could say that some of the institutions that do issue credit cards backed by crypto could conceivably take our stablecoins and add them to the pool of assets that could be used. That would be an awesome addition to the ecosystem, I think.
Okay. All right. So anyway, so what else have you got coming up in the roadmap?
Yeah, we will hope to launch on more exchanges, essentially, like we're on Osmosis and SwiftChain at the moment. We're looking into Juno Swap. We have a bridge to Avalanche, so we would also like to provide liquidity on one of their dexes, like Pangolin or Trader Joe's. So we're investigating all of that.
Okay, and there's also and there's increasing number of dexes in the Cosmos ecosystem. So there's Emeris and Marble are going to have their own dex, and Evmos are going to have several dexes.
Comdex, there's a whole explosion. There's like one coming out every week right now, I would say. It's which is super interesting. You could say it might not be sustainable for all of them to be in the market, but let's see what happens. I mean, for us right now, it's also a matter of using the liquidity we do have available wisely, because we don't have infinite liquidity to provide pairs on all of these exchanges. So it would be we need to sort of use our powder wisely. So that's also what we're investigating. For example, we're investigating teaming up with market makers that might want to buy our stablecoins and create pairs on their favorite exchanges, things like that.
Right. Okay. All right. And then also people can also farm NGM on Osmosis Dex.
Exactly. Yes, they can. Yes, we have had incentivized pairs on Osmosis, and we're considering doing that again. That was a pretty decent experience. So we might be doing incentivizing our pools again at some point.
Okay. And then do you have any plans to, I don't know, integrate CosmWasm? And because I know other Cosmos assets are doing that. Go ahead. Chihuahua Coin is going to add smart contracts. So you're going to have a smart dog.
Oh, really? Okay, that's
smarter than Doge and smarter than Shiba Inu.
Something to look forward to. It was on our roadmap a long time ago because we wanted to have our own AMM built into the chain. Now we have a limit order book instead. It was on the roadmap, but then we saw like how many projects were planning to do AMMs and things like that around the ecosystem, and we thought, okay, let's stick to what we're good at, which is handling all this bank and regulatory stuff that we've been doing, and then like leverage the ecosystem, which has to trade the tokens on, which has been working out pretty decently. So no, we will not be integrating CosmWasm probably. We don't see the functionality that would provide us seems to become available at a very rapid pace elsewhere in the ecosystem. So that's what we are aiming for, and then we will stick to creating these trustworthy stable coins.
Okay, and then do you have other stable coins on your roadmap? In particular the British pound.
I mean, we are looking into the British pound, and also US dollar would be very interesting. I mean, there's a lot of stuff happening regulatory wise on both sides of the Atlantic right now. Yes. So we would probably want to have that settle down a bit before we engage in, for example, US dollar. But that would be interesting. Also, following the regulatory landscape in England after Brexit could also be very interesting to see.
Right. Okay. Anything else you got coming up on the roadmap you want to let people know about?
Well, we're hoping to onboard some market makers in the not too distant future. That should improve liquidity across the stablecoins. We also will be in Barcelona for Avalanche Summit next week. So if anyone watching this is interested, they should look us up.
Okay, and that's the week commencing Monday, the 21st of March.
Yes.
Very good. Okay.
And I just realized that this might not be out before then. So well, maybe that was not.
I'll work it out and see if I can get it out before that. But the week commencing Monday, the 21st of March, money will be at Barcelona.
In Avalanche Summit.
Avalanche Summit. Thank you. Okay. Anything else?
No, I believe I've shared all the stuff I have about the project at the moment.
Very good. Okay, well, thank you so much, Henrik. I'm going to have all the links in the description below. If people want to go and get involved, join the Telegram group. You in Telegram and Discord? Or?
So far it's only Telegram, but we're getting a lot of people saying we should be on Discord as well. So we should probably do that someday.
Right, and I'll have a link to the website and people go check it out and follow them on Twitter. And if you have any comments or questions, put them in the description below. And also, please, if you're watching this on YouTube, come over to Odyssey because I'm being shadow banned on both my YouTube channels now. So it's bit.ly/CryptoRichOdyssey. Also follow me on Twitter, join my official Telegram announcements channel. I also have a weekly catch-up podcast, and I'll link to that in the description below. And Henrik, thank you so much. And for everybody who's watching, thank you. And between now and when I see you next, please keep filling your pockets with crypto profits. This is Crypto Rich and Crypto Henrik signing out. All the best. Bye-bye. Okay, Henrik, thank you.
Thank you.
I just thought of something that I want to ask you. And if you agree, I can work it in the previous interview, right? So I'll ask you the question and you can go to it. It's like, so what is it about your stablecoin? Okay, it's European, but what is it about your stablecoin and the way that it's designed that makes it so special compared to the other stablecoins that are out there?
Well, it's a stablecoin where we put a lot of effort into being compliant and publishing information about it being its backing, so that it's fully backed, things like that. So what we strive for is to be very reliable and trustworthy, essentially. So it's I believe some other stablecoins are doing the same, but there's also some that don't seem to have that focus, at least.
Right. Okay. And I think you do have the advantage of being incredibly fast and incredibly cheap to transact with. Thank you to the IBC protocol. That as well.
Yeah, there are so many. Yeah, the IBC is really something we have been looking forward to for quite a while, and now that we see it sort of unfolding and powering the whole ecosystem, it's really interesting. It's quite something to watch.
Great.
I mean, the other thing that makes our stablecoins different is also the interest rate property of it. Makes it viable in pretty much any interest rate environment. You could imagine, for example, if you are in a high inflationary area, which, for example,
no, the whole world pretty soon.
For example, maybe the whole world. Let's imagine that one day you have a 15% interest rate because someone is printing too much money. In that case, you don't want to hold stablecoins because you'll be saying, oh, whoever is holding my stablecoin is actually taking those 15% interest rate. Why shouldn't I get that? So our model, which allows us to pass the interest rate forward to the end user, would solve that problem. It would provide an interest rate to the end user. So on that level, his balance would seem more like a bank account than cash. You could say that right now, where we have an interest rate that is between 1 to 5%, people don't think about this stuff. But when the interest rate is low as 1%, then the people doing asset-backed stablecoins, for example USDC, may have trouble making money on issuing the stablecoin and keeping things sustainable. While if we go above, for example, 5% in interest rate, people will start asking the questions, why should I let USDC have the money they make on my money? have the interest money they make.
Okay.
So you could say our model scales well in any kind of interest rate environment, which I find
okay.
like a fascinating aspect.
So let me see that I get this right. So let's say, I think Turkey, I don't know what it is, whether it's 15% or 30%, but it's really high in Turkey. So let's say I'm in an environment where it's 20%, the inflation. So I've got 100 e-money tokens in my wallet, but inflation is going up at 20%, which means that the spending power of my 100 e-money is going down.
Yeah.
But my e-money earns interest. So what am I going to be getting more e-money tokens?
You could say if you took that money and put it in a bank, you would get hopefully something that resembled those 20%, right? Something close to it. So instead of holding cash, you would probably be encouraged to put your money in a bank account to withstand the inflation. This means that
just on that. Sorry, Henrik, just on that, just to make it really clear, because I'm not financially trained or technically trained, right? So in a proper, fairly functional fiat currency environment, inflation, let's say, is at 15%, then bank savings accounts might be at 17%.
Yeah, I mean, usually with high inflation, the central bank will raise interest in order to encourage saving and less spending, all this stuff. So in case of that, with traditional stablecoins that you have one-to-one, then it will be like holding cash essentially, which means that the cash will lie there onto your mattress and it will lose value slowly. While if you put it in a bank account, you would counter the inflation somewhat by getting an interest rate. With our stablecoins, where we pass the interest rate on to the end user, they would receive that interest rate that we got on the account where we keep the reserve. Okay,
so let's say with the example that I used, I got 100 e-money, and on January the 1st, and the inflation rate is 115%. So then at December 31st, 115. I might mess up here, right? So help me.
Yeah.
But my e-money would only get me 85% of what it got me before, 15% less, right? So how would I get the extra interest? Do you give me more e-money?
No, that's where the dynamic peg that I mentioned previously. It's what we can do when we get rid of the one-to-one stablecoin peg. It's where we replace that with the oracle that constantly says, this is how much one euro token is worth right now in euro. That allows us to create an interest rate mechanism.
Okay.
And so like one aspect of the model we've created is that it could work well for high inflationary currencies, which is interesting. Like we don't have any immediate plans to issue a Turkish lira, for example, as euro as a stablecoin, but I mean the model could work for this.
Yes.
I went to a meeting with one of the central banks that is furthest ahead with CBDC right now is actually our neighbors in Sweden. And one of the designers was in a meeting, and he said that the one thing he was very sad that hadn't made it into that design was having some kind of interest rate mechanism. So it's I believe that being able to have an interest on a stablecoin is a very interesting property of it. Yes. It makes a stablecoin seem less like cash and more like a bank account, essentially.
Right, which in a world where everybody's printing money like crazy.
Yeah, we could conceivably, in many of the places where we consider to be solid economic societies, end up having a very high interest rate and inflation. So to counter that, I mean, traditional stablecoins might not be the place to be. Probably people will start asking, why should the stablecoin issuer take all that interest money? Why shouldn't I get it?
Okay, and in a negative interest environment in Europe since 2014, it might be that 3% interest is a high interest rate.
That would be incredible. Yeah, if you could get that guaranteed. I mean, usually when you see a high interest rate, there's some kind of it's a risk premium, right? Like I remember talking to a guy once who asked us, why didn't we just buy bonds in, I think, one of the Kazakhstan maybe, because they had government bonds there, currently had 10, 12% interest rate. I'm trying to explain to him, I mean, that was a risk premium. There's a chance that these bonds might not get repaid fully.
Yeah.
So,
and now, what would happen if there were a currency collapse?
Well, I mean, since the tokens follow the euro value, then in case of a total euro collapse, then the tokens would have similar value, of course.
Right.
I mean, yeah, then I mean to hedge against stuff like that, I mean people would need to go to more traditional cryptos, right? Like I don't know, Bitcoin or ETH might be a better bet against the complete collapse of the euro. But yeah, I'm not sure, to be honest. I think it's more connected than people want to admit.
Right. Okay.
Now something happened at the end of this video, which is that I've lost the end of this video. But never mind, I will be featuring eMoney again. Please do go and check them out. I'll have all the links in the description below. Please do come and follow me on Twitter, CryptoRichYT. Join my official Telegram announcements channel. Thank you to Henrik for making himself available for this interview. And between now and when I see you next, please keep filling your pockets with crypto profits. This is Crypto Rich and Crypto Henrik signing out. And please do subscribe, comment, like, and follow me on Odyssey.